Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what happened today with the stonk. So as usual, if you enjoy the video, don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section is live. That link is down below. If you're interested, for just $3 a month, you get access to my updates, posts, options flows, technical analysis on Tesla, sometimes other stocks. Every single day the market is open. So if you're interested, definitely check it out. We'd love to have you there. Link is in the description of the video. It's a membership on YouTube, of course, if you're not aware. But anyway, jumping into it, Tesla closing the day up about 1.5%, we'll say, closing at $256.50 per share, which compared to the market, for instance, QQQ pretty much flat on the day. Tesla with a very respectable outperformance. Now, what does this mean moving forward? So there's a few things here, right? Yesterday, of course, we printed a pretty bearish looking hammer candle, inverted hammer candle, I should specify, or spinning top, I think it's called. I don't know, I forgot. I always forget what these are called. I always forget the names. I just have my own little names. I just know what they look like. I know what they mean. I just forget the actual name for them. Anyway, I just call it reverse inverted hammer candle, bearish candle, reversal signal. But obviously, you need follow through. Today, we actually got some of that follow through. We did actually come back down to about this 246-ish level. I talked about that yesterday, and we actually bounced, right? We actually did bounce, and we actually closed green. So that's a good sign for the bulls. It not fully, in my opinion, not fully negates this bearish candle, but it makes it much less likely to be a threat to the bulls now, right? The real way to negate it is, well, just to simply go above the high of this candle, which in this case will be pretty much 265 to really, actually fully negate this candle. But, the warning signs are nowhere, they're not flashing anymore, I guess is what I'm trying to say, right? With that being said, we also did come back down. We ended up doing this gap fill. We overextended a little bit. Usually overextend gap fills, right? Whether it's to the downside or to the upside, very common. And then we ended up actually, of course, filling it, bounced off of it, bounced right off of this demand zone at around the mid 240s roughly, and closed in the beautiful green. Now, keep in mind, if I open up, let me open up TrendSpider really quickly, right? Because TrendSpider, don't forget, I have TrendSpider set on the logarithmic chart. We talked about already on the weekly chart here how, we have arguably last week came back down to retest the linear chart trend line, right? This is the linear chart. This is the multi-year trend line. Came back last week, retested it. Oops. Retested it. And, so far so good, right? Well, we also talked about the logarithmic one, right? That was a little bit, less convincing, right? But so far this week, right? There's still a lot of time in this week. We shouldn't, bulls shouldn't be overexcited just yet, in my opinion. There's still a lot of time in the week. A lot of things can still happen. Netflix earnings coming out on Thursday. That could potentially set the tone for just tech in general. We'll see. But as it stands right at this very moment with the weekly candle, it has broken out. It looks more convincing. And today, which I mentioned yesterday, it did come back down to retest that trend line, like I said, around that mid-ish 240s. That's exactly what happened, exactly what we talked about yesterday. And so far, so good. Obviously, there's still more work to be done. But, again, so far, so good. That's, all the bulls can ask for as of right now, which is a good sign. So those are the main things I'm looking at right now. Now, with that being said, there are a few caveats, right? Those are the bullish signs. So Tesla is setting up some pretty, potential bullish things here. But there are some, there's still some, things to be aware of potentially for the bearish side. For instance, the way I look at it is pretty simple. The most simple way I can put it is this. On the daily chart, actually, let's go to the 1 hour chart quickly first. There's two things you can look at. One, on the 1 hour chart, we have a potential little pennant over here, right? A little bull pennant. Again, just because it's called a bull pennant doesn't mean it has to play out in the bullish fashion. So on the 1 hour chart, you can look at it in a smaller time frame. Well, if we break above 260, which is similar to the daily chart, I think the bulls are back in control. Essentially, this consolidation has finished. We have consolidated, we did our thing, and now the bulls are regaining that momentum to move up even higher. At minimum to about, retest these highs at about 270. Honestly, wouldn't be surprised to see 280 though, if we break out of this pennant, right? 280s I think is in the cards. But obviously, there's still the downside protection, or not protection, but the downside potential. For instance, if we break down below, probably not next week, probably tomorrow or Thursday, if we break below really like low-ish 250s, like 253, 252, 254, something like that. Depends on when it happens, of course, but somewhere around the mid to low 250s. If we start losing these levels, that's where we're breaking down to the downside and things get a little bit more concerning, and that's where the bears can start getting control again, right? So that's the thing you want to pay attention to on the 1 hour chart. On the daily, and the way I look at it is also pretty simple. Also, if we break 260, which is this kind of massive bull flag we're setting up, breaking 260, congratulations, the bulls continue the momentum. Beautiful. Pretty simple stuff in my opinion, right? Especially if you close a daily above 260. Ideally, you want to wait for the daily close, but even just breaking above 260 is already potentially a good sign. On the flip side, as long as we are below 260 with Tesla here, in my opinion, moving back down for the fourth touch point on this bull flag is a possibility, a pretty real possibility, which will take us somewhere to about $220. Because don't forget, if I bring out a bull flag, for instance, right? A bull flag, you know, just to see what they roughly look like, right? This is kind of what bull flags look like. You have several touch points, right? If I go over here, if I go over here, right? You have several touch points. Usually it's 5 and then the 6, I think, breaks, or you have pretty much 3 touch points on the bottom or 2 touch points on the bottom of the flag, right? Essentially, it's the easiest way to think about it. So for instance, you know, if we draw it out how this bull flag has so far played out, right? We have obviously the massive bull flag, touch point 1 here, touch point 2, which is the first touch point on the bottom line, touch point 3 just now, yesterday. And then technically touch point 4 is still a possibility all the way down here, which again, somewhere around the 220s, right? That is still a possibility. And then we break out, right? Technically possibility, we actually do another touch point down here, the 3 touch point like this one shows. 3 touch points here, essentially 3 touch points at the top, and then that final touch point, which is the 4th touch point at the top, or the 3rd touch point at the top, is the one that breaks us out. So it'll be something like this, or it'll be something like this. That is a possibility, right? Now, obviously, you can have premature breakouts. For instance, we can just break out from here right now, break to 60 tomorrow. Congratulations, it's a premature breakout. That makes sense. That's a possibility. But you know, the way I look at it is, well, this is just kind of the situation I see. As long as we're below 260, in my opinion, a touch point down once again for the 1, 2, 3, 4 touch point is a very real possibility, and then we potentially break out on the 5th touch point like that, right? So it'll be something like that. That's the way I look at it right now. And what further solidifies this for me to believe this potentially might be happening is the fact that, well, you know, we are pretty much setting up a bearish divergence on the RSI. The MACD is getting lower and lower and lower, right? The momentum is obviously slowing down, which makes sense, right? Today's volume is on the lower end compared to at least, you know, the recent volume we have for the past like 2 weeks or so, right? The stochastic is still flipped bearish, right? So the momentum is still on the slower side, right? On the, you know, the momentum has not really picked up too much for the bulls yet until we see unless we see a cross back over. That's a different story. But as of right now, of course, the green line is well below the red line. Pretty simple stuff. And, you know, that's just the way I look at it right now. On top of that, we also have my bands, of course, down here. And you have the market bias. Pretty much both at the moment as they're playing catch up to us, sitting pretty much around the low to mid 220s. Wouldn't make, you know, it would make sense for us to come back down to that level as well. Not saying it will, but I do think that pretty much as long as we're below 260, this is technically the outcome I'm expecting right now until 260 is broken. Once 260 is broken, this outcome is most likely no longer expected, at least not for a while, and most likely we make our way back up to 280. That's pretty much the simplest way I can put it, and that's probably the easiest way to really look at it moving forward, in my opinion. Not financial advice, of course, just my opinion. Now, one thing that's pretty interesting, the one thing that is very bullish though, is Tesla, of course, you know, 20 million bullish confirmed flow, which is great. But what's even more better is the fact that there's 2 massive whales that came in today. This is a smaller version of it, but a year out calls, 480 strike came in with a bunch of calls coming in here. This is, if you add them all up, it's probably like what, 3-4 million, something like that, right? So that's pretty damn solid. But what's even more solid is this one. A substantial amount of calls came in, pretty much starting at, I mean, pretty much 2 o'clock this afternoon, all the way until 3 o'clock for that pretty much full hour. Just a consistent, constant flow of 300 strike calls. September 20th. I'm not even going to add all this up. I mean, you can probably go ahead and add this all up yourself, but it's probably like well into like maybe like 10 million, maybe more, honestly. I don't even know. A lot though. A substantial amount of calls came in throughout the day, just constantly hitting at 200, 200, 200, 300, 300, 300, 400, 400, right? Very, very high amounts of flow came in for this 300 strike call for September 20th. So that's very bullish, right? But again, it's September 20th, right? That's why, to me, and maybe for this whale too, if in theory we do play out this pattern that I just mentioned, if we do come back down to 220 first, ultimately I still view this as a massive bull flag. I still think the probability of it breaking out to the top upside and Tesla moving up even higher, you know, closer to potentially even 300, like 280, 300, something like that, it's still possible. I still think it'll happen even if we come back down to 220, as long as we, of course, don't lose this bull flag. And I think from there, you know, regardless, this whale will most likely still win because it's, of course, for September. They have time, right? So that's important. But that's kind of the main way I'm looking at it right now. Obviously, we'll see, right? But again, simplest way, below 260, 220s is in play. Above 260, 220s is most likely no longer in play. And we most likely head up to about $280 per share. That's the simplest way. Really nice, clean, simple. No reason to overcomplicate it too much. And that's pretty much the main thing I'll be looking for moving forward, potentially this week, honestly. So yeah, thanks for watching. Let me know what you think down below. If you enjoyed the video, don't forget to hit that like button, and I'll see you for the next one. Peace.